Hi, I'm James and welcome to ArcisFX. I'm going to have a look at a couple of things today. I want to give you a very brief overview of what I think is going to happen in 2024 and probably starting now going into December. I think we're going to end a very tricky time in 2024. We've got serious economic problems potentially coming up during 2024. We've also got problems across the board in various other economies as well. Inflation seems to be coming down quite rapidly, but we're not sure if that's going to continue to move low or if we're going to get a little bit sticky and perhaps even a slight elevation in inflation, which may affect the Fed's decisions going into next year and how early or late they may or may not cut rates. The US is also continually nagging on about and dripping on about potential threats from China and Iran. And quite frankly, the sort of sabers and shields of war are starting to rattle a wee bit, which is a big concern. There are concerns about a potential second .com or AI bubble going on right now. And to top it all off, we've got the US elections next year with a very uncertain field and all sorts of shenanigans and weird stuff going on from both sides of the spectrum. So where does that place us going into 2024 and what am I looking at mainly? And I'll just give you an idea, an overall picture. Now, I could be completely wrong. I want you to be aware of this. Quite a lot of the time I'm right, but also quite a lot of the time I'm wrong. So these are just my ideas. I don't want you to place any trades on this basis or make any big bets on what I'm saying, but this is the general overall picture which I think may unfold in the next 12 to 18 months. I think as the world continues to look for better and new energy sources, we're going to see a focus on uranium and even natural gas. And I think we're going to see a phasing out of coal. There are already shortages on the supply side of coal, and I think oil over the longer term, much longer term, will start to diminish as a power source. I just saw an article about Porsche coming up with this sort of new prototype hydrogen-fueled engine. It seems like they're making some dramatic progress there. And perhaps, just perhaps, one day we might see my prediction come true that this EV electrical vehicle bubble might be just that. And as better and cleaner fuel sources such as nuclear, hydrogen, and even natural gas take the forefront. So in the energy plays, I'm going to continue to look to short oil whenever we get a good chance, and I'll be looking to buy natural gas and buy uranium on dips. We're already, of course, long on uranium and natural gas. Switching across to metals, I'm not too sure about copper and silver, palladium and platinum, but I do think gold's got a good chance. We're going to look at gold in some detail shortly. I'll be focusing a lot on gold going into 2024, especially if and when interest rates come down. When it comes to currencies, I'm looking for continued but jaggedy dollar weakness. So we'll see the dollar begin to inch down, interspersed with fairly frequent and violent counter rallies. But I'm specifically interested in the dollar yen, and that's the one I'm betting on. I'll be trading the euro long and the pound long whenever I get the chance, but I'll place more focus on the dollar yen and we'll continue to look to sell dollar yen on rallies as we have been doing since 150-150. We've had a fantastic profit on that play in the latter part of 2023, and I think we'll continue with that play into early 2024. And when it comes to stocks still, I think it's anyone's guess. We could be due for a continued melt up and much higher stock prices, or we could be reaching a top pretty soon, if not already. I'm not 100% convinced about it either way, and most people aren't either. So when it comes to stock markets, we'll continue to trade this both ways, look for longs and shorts, remembering that the strongest rallies in the stock market often take place during bear markets, so we'll keep that in mind during this whole process. Having said all that, let's go and have a look at the charts. I'm not going to spend more than 1 or 2 minutes on each chart. Let's go through them and cover the instruments which I've just highlighted as being the most important ones to me coming up in the next year or so. Here's natural gas, and you can see we're down at the 2.5 level. That's the dividing line between the bulls and the bears that I've been talking about for such a long time. We're below the 200-day moving average. We're below the 618 Fibonacci level, but we've got to the 2.5 level. It's an incredibly key level. Below here, we've got another Fibonacci, the 786, which is also important, which is at about 2.3. My overall idea on natural gas going into next year, I think we've got to get through the winter. Often gas prices drop during the winter. We could see as low as $2 or lower. I don't know how this winter is going to pan out in terms of temperatures, but in terms of supply and demand, there's a lot of supply and a lot of storage and not enough demand at the moment. That relationship will change, of course, as we go on into the latter part of this year and into early 2024. And as storage begins to drop off during December into January and February and demand begins to increase into those months, we should see an uptick in the price of natural gas. So this is a pretty crucial support level. I want to point out to you a tweet I put up on X last week, and this is the tweet. Let me just expand this. Natural gas, nat gas, has reached $1.64 times in the last 25 years. In the statistically unlikely event that it does occur for a 5th time, it will be a heyday for buyers. Bring it on. Now let's have a look at this chart very quickly to summarize. There's the $1.60 level. Those are the occasions that we visited in the last 20 years since 1996, a bit longer than 20 or 25 years, and we've only reached there 4 times. So in the statistically unlikely event that we do get down here again, it'll be a fantastic time to buy. However, having said that, this level here that you can see on the chart that we're at right now, at this Fibonacci level and the key 2.5 level brings us into some pricing where natural gas is now a good deal. So it's a good deal between $2.50 and $3, Below $2.50 we enter the bargain area, and below $2 we get into the dollar store area all the way down to $1.60 or $1.50. I don't think we're going to get that far down, but if we do, it'll be a good time to buy some more natural gas. In the meantime, we're just hoping to hold this $2.50 level. We've got the weekend gap coming up. That's tonight in a few hours time, Sunday evening. We may see this price gap up or gap down or just stay where it is. I have a feeling though we may gap up, and it could be a fairly sharp and sudden gap up. I'd like to see us take this 200 period moving average on the day chart if we can. If I switch this to a weekly chart, it's also a significant level on the weekly chart. You can see we're at that key level, the red line. Here's the 50 period moving average. You can't really see it. We've just broken down beneath it. And the 50 period moving average on the week chart is similar to the 200 period moving average on the day chart. And you can see we've just broken beneath it. Not by far, and it does happen from time to time. The 200 period moving average is a really good directional indicator. I'm going to zoom out here just to show you. You can see generally when we're above it, we stay above it. When we're below it, we stay below it. We do get occasions where the price spikes through the 200 period moving average. You can see it's happened frequently, and we've just done that now. It doesn't mean that we have a trend reversal. Sometimes we just need a spike there to clear out some of those long hands holding on. Just that little dip below 2.5 also helped do that a little bit. So we've maybe cleared a little bit of a way for a rally here. Let's see how we open up in a few hours time from there. There's the day chart. Let's have a look at the 4-hour chart. On the 4-hour chart, we're still below the 20 period moving, the 50, the 100 and the 200, and they're all moving downwards in alignment. So we've got a strong downtrend. And what this could be right here is a bearish flag. I do like the way we've held above 2.5, bounced off it on multiple occasions, but I'd like to see us gap up, maybe on the weekend, maybe tonight, gap up above the 20, and then move up into the 50, the 100 and the 200. My overall target for natural gas, once again, is at the top of the range, the top of the channel. Let's go back to the day chart, have a look at that. And there it is there. I've just drawn it from bottom to the top. There's the top, there's the bottom, there's the Fibonacci retracement. We either need to go to the 786, which is at 2.3, or we're going to hold here. If we do get to the 786 at 2.3, it's still touch and go whether we're going to hold there, or we're going to have to revisit $2 and potentially below once again. This would not be a unique occurrence. It has happened before, exactly the same sort of pattern, a move down, a strong move down, bounce off, a rally, a gradual incremental rally, followed by a sharp dip back down to support, a spike through it, and then the resumption of the real rally. We may have to see that take place. For now, though, as long as we're above 2.5, happy days. We'll be watching this one very closely. We'll be looking to sell oil on rallies, looking for rallies back up to the 200 period moving average, maybe this downward trend line. Let's get rid of this one. It's been broken now. And overall, expect oil to retest these levels in the sort of high 60s and then eventually break down below that. However, given the supply and demand situation and the shenanigans, I used that word twice today, by OPEC Plus, and also the demand situation. If we see a big economic downturn, it's going to put pressure on the price of oil. We'll keep an eye on this one very closely. The general idea is to sell Brent crude oil into rallies. All right, I'm not going to cover anything else on this chart, just to say we have nothing on Bitcoin and we are long on VIX. We're out of our sugar shorts, which was fantastic, brilliant trade. We're still in London cocoa futures shorts. Hopefully that'll play out. We had a bit of a rally at the end of last week, but nothing to be too worried about at this stage. Going on to metals, I highlighted two metals earlier. That was gold and uranium. We're long on uranium. I'll start with uranium because I want to do this one quickly. The gold chart's really interesting. Let's have a look at uranium. Well, we're just in an uptrend channel. I think this is going up to 30, 40, 50, 60 and higher as demand for uranium all over the world starts to surge. We're seeing nuclear power plants being erected all over Europe and particularly in France and also in China. So I expect uranium prices to continue to move up, but it could be incremental and fairly slow. This is more of a long-term trade. Gold might be the most interesting chart on this, and I'm going to give you a little illustration. Now look at this. First of all, I'm going to go to a monthly chart. Please ignore all these lines. I'm just going to leave them on here so I don't have to redraw them. So on this monthly chart, it's pretty clear. We've got a multi-year triple top on gold starting in 2020, then again in 2022, and then again this year. On this last surge higher, we broke through that triple top. This is on the back of the drop in the 10-year bond yield, potential interest rate reductions next year, economic and political uncertainty. We smashed through that triple top, went all the way up to 2135, and then dropped back to 2000. That's where we are at the moment. We've just gone long on gold at 2000. Let me explain to you what I think has actually happened here. And in order to do that, I'm going to show you a quick video. So this video is about the launch of the M58 mine clearing line charge. Let's just have a look at how this works. So you can see they launched this sort of rope filled with charges from an APC or something like that. And then it's detonated and it clears a path of about 100 meters long and about 10 meters wide and gets rid of all the landmines and undetonated ordnance lying around, if there is any. And what it does is it clears this path and basically allows the vehicles to move through. Now you might ask why I'm talking about that. Let's go back to the gold day chart. And there we are back on the day chart with our lines and channels drawn in. That's that line I'm talking about, that big spike up to 2135 through this triple top level at about 2074, followed by this immediate move back down again. Now what happened with this move is everyone was trading this breakout long. Let's go back to the monthly chart. So this is a very, very, very clear triple top. There's 1, 2, 3, almost identical prices. And then that line or spike surged through the triple top, followed by the collapse back down again. So what's happened here is the moment this broke out through the top, through this triple top, everyone went long, everyone piled in. Of course, loads of stop buy orders were triggered. And of course, a lot of limit buy orders, which would be acting as stop orders. So once this moved up and then collapsed back down, not only to support, but back down through support, all the way back down to the channel bottom and the big round number 2000. All of those trades were cleared out, leaving the order book pretty dry, I would imagine. So we back down at 2000, below where we were several days ago, having cleared out all the longs, stopped out all the shorts, stopped out all the longs that went long. And now here we are sitting at 2000, the big round number, an obvious psychological number, a really significant number. And I think what we've done is exactly what that landmine clearing rope, explosive rope has done. It's been shot out ahead, it's detonated, it's blown up all the cannon fodder, all the retail traders and those who went long, those who were short, who were stopped out, got rid of all that, all the cannon fodder. It's a little bit like warfare, and has now cleared this path for us to go long. And I think the natural number for us to go long at is 2000. Now we may get a few spikes down. We've got lots of support beneath us. We've got the 50% fib at 1975. We've got the 618 fib at 1950. We've even got the 78.6% fib at 1880. Now, if you remember trading this over the last number of months or years, that all of these numbers that I've called out are very crucial and key levels. I'm not going to demonstrate that on these charts right now, but if you've been trading this at all, you'll know that 1950, 1880, 2000, all of these numbers that we're talking about, where these fib numbers are, and also these horizontal lines of support and resistance, and these moving averages. Look how close the 200, the 50, and the 100 are together in confluence. So we've gone long at precisely 2000 with a small position on gold, willing to add all the way down to 1880, down to the top of this original breakout channel, and this would be a good place to go long. There's the downward sloping channel. We broke out. We have not revisited that channel line yet, and often gold will do this. Bear this in mind and don't be scared if we pull back all the way down to 1880 to the top of this channel breakout and the 78.6% fib. I don't think that's the most likely occurrence to happen, but it's possible. If it doesn't happen, we're long already, a little bit to start with at 2000, willing to add at these levels below us, as I pointed out. And I think this is going to be the play for at least the early part of 2024. So that's gold. And the last one I want to look at is dollar yen. And when I'm talking about dollar yen, I'm including all the yen pairs in this. So I'm talking about euro yen, pound yen, Aussie yen, Swiss yen, Canadian dollar yen. All of those fall into the same category or broad strategy that I'm talking about here. We saw a dramatic collapse on Thursday in the dollar yen, a little bit of a recovery on Friday, but this was precipitated by comments and rumors and more shenanigans. Third time I've used the word shenanigans in this video, by the Bank of Japan, saying that they may in fact increase interest rates by the end of this year or very early, let's say January next year. And I think we're going to see the dollar yen move down, as I've been saying for a very, very long time now, into the low 130s. We're now at 145. If we get to 130, that's 1,500 pips below us. And we've already taken about 500 or 600 pips profit on this move down from 150, 150 or 60. We exited all of our trades last week, and we've now started to resell starting at the current level. Now, the dollar yen could rally back into any of these levels above us. I've got no Fibonacci's drawn on here. I've simply got two horizontal zones, which I think we could get into. We've reached the first one, so we've sold. There's another one above us, so we could reach. I'll look to sell there again. We're looking for this to move all the way down into the low 130s. And every time we get a bounce, I'll be looking to sell. Every time we get a decent dip, I'll be taking profits. Let's put a quick Fibonacci in there and let's see how this coincides with those levels. And there you can see the 38% Fibonacci aligns with this green zone, and the 50%, my preferred one actually, I'd like to get all the way back up to here, is at about 147. Have a look at where all the moving averages are as well. We've just bounced off the 200, the 100 periods up here at around the 147 mark. Then we've got the 20 and the 50 way above us up there. Let's just put this little trend line in and see if we can draw a path. And we'll be looking for something like this, either a move up to that level at around 147, potentially even slightly higher. Maybe we need to break this trend line and get up slightly higher, maybe up into this level over here. Any of these levels will do, but then eventually I think we'll see the selling pressure really come in strongly and we'll see this begin to move down quite fast. Could be possible, of course, that we don't bounce up any further from here and then we carry on moving down. Overall, the play for 2024 and the rest of this year is to continue to sell the dollar yen on any rallies, and in general just looking to buy the yen against all the other currencies. In other words, sell the yen crosses, and that would be the euro yen, the pound yen, dollar yen, Swiss franc yen, all of those sorts of pairs. So that's another one of my main plays for the rest of this year and going into next year. At the same time, we'll be looking to buy dips on the euro and the pound. And all of this is predicated on the Bank of Japan increasing their interest rates, but also the dollar beginning to fall off by itself in general. And this is where the dollar is at the moment. We've had a steep drop off, a bit of a bounce recently during last week and the week before. We've got loads of resistance above us on the dollar index. We'll be looking for moves back into these areas and potentially even a move from where we are now. We could draw the same path on here and it would look something like this, either a move down from here. Could well do that. We're at the 20 period and the 100 period moving average and we're just above the 200. That's this purple one. Or we may have to move up into some further resistance above us, even as high as 105.50 and maybe even 106.20 or 30, somewhere up here. That level there at 106.20 is the 78.6% fib. This has been a big trend upwards so far, and they don't always turn on a dime. So anything like this that you see on the chart right now is potentially possible, and sometimes even preferable in a big strong trend change. Sometimes you want to see that 786 retested before the continuation of the move. It's not always pleasant because we have to endure it for a while, but often it means that there's a stronger trend coming up in the future. Well, I hope you enjoyed all of that, folks. Have a great trading day. I'm going to update on some of these in more detail early in next week, so keep an eye out for those videos. And so that you don't miss them, consider subscribing to this channel and give us a thumbs up if you don't mind. I'd really appreciate that. Take care. Good luck for next week, and I'll speak to you soon.